Gotcha. I'll put up the disclaimer and give people plenty of time to read it.
All right.
Read away, read away. That's good enough. Pause it if you need to finish reading it. Hello. Welcome back to another, I guess, issue of pandemonium in the markets lately. Starting to maybe float on a glimmer of hope, but there's some rough stuff going on here that we got to dig into. Plus, some insight into developing your ability to prompt AI. And I'm going to let Matthew take that away because he's way more into AI than I am at the current time. But I'm getting there.
I definitely am. So, welcome. Interesting couple of days in what is going to be an interesting week. So we had, the FOMC meeting, which was, inconsequential as we thought. Interestingly, Powell's commentary was hawkish. Markets started to sell off. Then in the presser, he walked that back. I'm thinking Nancy probably tapped him on the shoulder and said, "Hey, Jay, I bought calls. Can you help us out here?" The real event is the tech earnings. So, coming off of DeepSeek and coming off of Monday's bloodbath, what you wanted to hear is Meta and Microsoft not say, we're cutting capital expenditures. And they didn't. So now what we're seeing is a rally back in all the AI infrastructure names, a sell-off in the software names. And, and remember how this stuff works. So Monday morning, you had a bunch of hedge funds, a bunch of money managers that were way off sides on AI power and infrastructure. They had to sell and they had to buy software. That drove the software names up. AI power got killed. You're getting, it's not a complete reversal of that, but now, people are going back into AI power because, Meta and Microsoft didn't say anything about DeepSeek being a problem. I would look at AI power, AI infrastructure as something I would hold. If you are offsides on it, now would be the time to cut back to a level that you're comfortable. I think I'm like 20% of my options portfolio is AI power and infrastructure. I'm fine with that number. So I'm not buying, I'm not selling. The areas that are most interesting to me don't involve DeepSeek. And, we're seeing rallies there. AI healthcare is going to be huge. Again, Mark Andreessen, Jensen Huang have both said AI is going to have the biggest impact on healthcare. Nancy Pelosi did not buy Tempest AI for no reason. She knows what she's doing. And she knows things that the rest of us don't because it's illegal inside information. So, that's an area that I would also be very interested in. Crypto. Again, the cool thing about crypto is we've got a pro-crypto administration, SEC, all that fun stuff. And crypto really has nothing to do with DeepSeek. So, when it sells off on a risk-off environment, that's a good buying opportunity. The area that is not really participating today, but I still love, is the robotics. Because remember, then, and not the next phase, but at some point, we're all going to have commander data in our homes. And that's when it gets really, really interesting. So, the robotics is something that, that I would be looking at as well. So, that's kind of my summary of where things are. I did buy the dip on Microsoft, and I may buy a couple other software names that Jeremy's going to tell you to short. But, I'm looking at them again long term. I'm not looking at them to trade. So, Jeremy, what are you looking at?
I mean, I'm not necessarily saying short them. I'm saying keep an eye on them. But the one that follows through, and I started this chart out a while back. We were pretty much in agreement on shorting Microsoft or AMD here, and fundamentals kind of play a little effect on this. AMD is very China dependent, much more China dependent compared to Nvidia, for instance. I get that with the fundamentals, but with the price action, yeah, AMD followed through for a great short. In fact, I'm still looking bearish on this until this pattern breaks, and it can still bounce off of this little LZ here, which is below the measured move standard here. Sure, but in the short term, I think we're not out of the woods yet. We have earnings coming up, and the truth will start to come out for what Q4 looked like, and I think AMD is not looking so hot at this point. So maybe stay out of the earnings call, or maybe take advantage of the earnings call. So if it gives you a dip to 104 real quick, which is the base of this whole move, which is just a reversion trade, and it bounces there during the earnings call, I might go long, sure. In the meantime, I'm still leaning bearish, at least up to that event horizon, so to speak. And then I can say if things have come down enough with AMD, you can see some fair value in that area as far as basic charting goes. Comparatively to Nvidia here, Nvidia is still pretty volatile from the get-go on this whole thing. It's just making repeat attempts at reversion trades, which it's done. We can see that the reversion of this trend here is right at that 117 pivot. I don't know if everybody caught my alert yesterday, but I went and sold some cash secured puts on NVDX right here, $10 strike, and overnight clocked in a 66% return. I bought to close them at 30,
Nice.
rolled that through. Happy with that one, and then I might look to sell them again at 90 cents if things continue, and that's just next week expiration. It's really tight. So if you're going to play through this stuff, those leveraged ETFs might be your go-to for trading as far as risk to reward and capital deployment. For every one contract of NVIDIA I can sell 10 NVDX. So I can scale that to where I can have the same risk with shorter, faster moves. That's why I can make a trade like that and kill it overnight. In this environment, that's kind of the go-to. But in the long term, we have earnings coming up on NVIDIA, and they're a little later than AMD. So based on AMD's earnings,
When is AMD's earnings?
I think it's any second now. Hold on, let me get back to it. Let's see here, the 4th, so next week.
Okay.
And that's going to give us kind of a little leadway to what to do with NVIDIA, because they're very similarly structured. The only glimmer of hope that NVIDIA has is they got a fairly large facility in Arizona for production, even though the products made there still have to be packaged in China, which is kind of crummy. But it wouldn't take as much infrastructure shift to be able to facilitate packaging in a neighboring factory in Arizona versus what AMD's up against. So I think there's a glimmer of hope there in the chips, at least for that matter.
So while we're on AMD, just as people probably know, I'm a big believer in using ChatGPT, or whatever. And right now I use ChatGPT. I play around with DeepSeek, but ChatGPT in your trading. I also think you ought to learn how to read charts. So ChatGPT is consistently trying to tell me to buy AMD, and I don't blindly take trades. I'm still going to look at the charts, and this chart of AMD is telling me that the market thinks they're not executing on their strategy. And when I'm buying stocks for the long term that I think can benefit from AI, I want companies that are executing. So even though Nvidia's gone down a bit, I will take Nvidia over AMD all day, every day, until I see things start to turn around. I'm not going to own it in my long-term portfolio. I think you could end up seeing some sort of undercut and rally here at some point and, maybe take it for a trade. But
Right.
yeah, I mean, the chart is telling you something here.
And I agree with that. I mean, I can see that NVIDIA here has undercut the 200-day moving average twice now and hit that magic pivot I've been putting out for a while. That 117 has just been methodical for both the ride up and the ride down. And if by chance, you look at the 2-hour chart, if by chance we get a nice clean double bottom reversal here, okay, I can get with the program here, and I'm going to probably hinge that onto looking at AMD and earnings to kind of give us a sort of not a carrot on a stick, but a sort of an impulse idea of what to expect this to do. If it's going to fail, that's about the point where it looks like it would fail. So if we can come down to that level, hit that 117 and bounce back for half of this trend back, come back to like 122, wait there, trade some chop and wait and see, because on the 4th when AMD announces here, that would be a prime spot where if you're looking at technical analysis styles, that's where a potential double bottom reversal can suddenly turn into a fast liquidity grab bear flag. And then we got this as a primary. And if things really hit the fan, so to speak, we've got targets down below pretty obvious. A full measured move would take us below my previous red zone here, and we'd probably start playing with this level down here, like 102, maybe even 100 even. Pretty nutty, but that's a lot of money to make that move that far, and it is possible. Can we see maybe a little bit of reprise from AMD in the near future is what I would focus on. I would do a comparison of technical analysis and find that AMD is pretty close to that bear target. It's at a target where it could reverse. There's certainly some liquidity to be had there, but earnings is still going to be the crapshoot, so to speak. You need to wait for that and go from there. So it'll give you a stepping stone, so to speak, as to where the next setup is likely to be. So for traders, yeah, we're on it. For investors, this is a spot you don't want to take either side until you get an outcome. So you want to wait for the follow through on this if you're going to be long term. Just my opinion on it.
Yeah, and again, for me as a long-term investor, I'd be looking to buy the dip. Interestingly, we may have had the biggest day of inflows we've ever seen on NVDX yesterday. We had well over 100 million come in. If that's not our biggest inflow day, it's pretty close.
And I was glad to be a part of that, although a very small one. In the option side. But yeah, it's, you're going to start seeing probably a little bit more volatility in NVIDIA anyway. I would come to expect the leverage to be there because, as I was saying before, for every one contract of NVIDIA I can sell 10 on NVDX. So I can theoretically do 20x leverage because that's already double leveraged in itself. Would I take advantage of that in the short term? I have, but now I'm like, I could sell those $10 strike cash covered puts again on NVDX and be comfortable for an overnight, but I'm still going to be very leery of what I see from AMD if I'm going to hold those for anything longer than a couple days at most. And ideally, I do want to be wheel trading NVDX. That's what's my goal, is eventually I'm going to take assignment on this. But for now, if I get an overnight huge return like that, you're damn right I'm going to close that trade and reset it later. Take advantage of the short term and use it to compound your position in the long term. I'm a huge fan and a proponent of that. So that's just my MO. Comparatively, I wanted to kind of look at a couple other things that are kind of tagged onto this. And you've been talking about TSM and how AI is repeatedly telling you to buy that thing. All I see in the short term is a reversion trade, and it's damn near there. I mean, 210.80 is where the target is. It's just splitting the difference.
Nice, the undercut and rally at the 50 day.
Yeah, that too, and that's pretty close to that half back issue too. So if it does break above that, cool. You can finish that rally and run for the previous fib high another $10. Up to like 221, 222 in the short term. So that makes sense too. I mean, if you're doing it because you're letting AI talk you into it, that's one thing. But technical analysis tells you it's still pretty bullish in general. So it's not the worst idea in the world, but it's also a bit parabolic. I mean, never really did market structure, but it's a chip maker. So I mean, look back. Here's your market structure, way back in the beginning, and that's all that consolidation. This is your basic trend out. That's been done. Now we're in a secondary hype wave, and things are starting to heat up in that space. So yeah, you're going to see some parabolic moves. So all you can do is have an intermediate outlook on it, and then scalp some of the volatility in the near term. So I can see some opportunities there. Getting long down here on this primary and secondary move here back to a reversion target. Tried and true. It's done to death. At this point, as a long-term investor, I would say this is the point where we're waiting to see if it's going to break or reject. So right at that level, about half back. And hopefully I can help with giving people an edge on that type of stuff because to me, if I'm ever going to be, long before I became any kind of investor or trader, I looked at price action as my primary focus of learning, regardless of fundamentals. I mean, anybody can thematically find fundamental advantage in just buying and holding long-term companies. That's fine. Nothing wrong with that. It works great. But why not take advantage of the price action in between to maximize your efficiency in those investments? And it's kind of my MO. I can use the short-term volatility to compound my investment. I can use the short-term volatility to generate income on it. I can also use a combination of both, which is what the wheel trade is. I'm fundamentally long in the company. It's something I want to own. At the same time, I can sell that volatility to open on options and take advantage of the premium involved and let time decay pay me, so to speak. So I'm getting paid to rent out my position. Can you take advantage of all that? I hope so, because there's a lot there to swallow. But once you get the gist of it, it really makes some sense. So a question here on the YouTube side asking if AMD needs to get over 121 for bullish, and yeah, that's kind of what we're just looking at. I mean, that's where the deal is. It needs to get back above this key pivot.
For me, I would say, an undercut and rally at the 10-day would get somewhat interesting. Also, an undercut and rally at no, it's already there. I mean, technically, you could buy it here with a 114 stop if you wanted to. I wouldn't, but
yeah. For me, I mean, as a trader, the juice isn't worth the squeeze on that. I'm neutral until I see what this does. It can either reverse here or it can dump here. So I'm going to wait. Patiently sit on my hands with this one. I've already done well shorting it. For now, I'm going to stop and wait. It's time to stop, look, and listen before you cross that road. A couple of parallel situations we're looking at, like we were just talking about the TSM. A couple of the other things to look at. Snowflake was one of them that popped up on our radar on Tuesday here, and the technical analysis was pretty damn good on that. I said, look out for this liquidity zone here, and it went exactly to be on that sucker and pulled back. Gave us a nice measure move back for half of that trend. Now we're sitting back at support again. Would I take a long position on this? Market structure says maybe, but I'm going to wait and see again where this liquidity zone takes us.
It does look like a double top. I mean, this is a long-term holding for me, but
yeah,
certainly looking double toppy in the short term.
So as I say, in short term, use profit from failure to compound your long outlook. And a double top just says opportunity. It is right in that infrastructure, or that market structure where you'd see this is kind of the threshold and it's right up against it, it can reject it several more times and range around in this route between, like, 112 and 189, 190 here for a long time before it finally breaks out of market structure. But this is just classic market structure here. So eventually you'll want to own this, but in the meantime, there's plenty of volatility to be had in this until it starts to trend. Looking at one of the other, I guess, devil in the details move was Google here. I mean, it's just one giant bull flag in spite of the short term. And I use this, or not Microsoft, I use Google for it, but Microsoft is also an example of just simple volatility trades within the reason of trend lines. And it's pretty volatile. Where's the earnings call on that one? Hey, that was yesterday. So,
Yesterday. Yeah, I just before we got on this call, I bought the dip in Microsoft. And I put, I mean, it's a long-term hold for me regardless, but I did put their earnings report and some information into GBT and said, hey, what do you think? And they're like, yeah, it's still cool for long term. I think I put that in today's newsletter as well.
it's a decent point to buy. I mean, at this point, it's at an angular support. It's had its measured move. It's got a good potential running back to the mean here, up here around 435, 438 in that realm. So it's got plenty of upside in there. I think it's a good time to buy this one too. Just if you're going to long term it, or you're going to make some short term income on your long position, that's a good entry point. And the other one was Google is the one I used for the example, and this was where I was demonstrating the liquidity trap detector, and this is the tiny wedge off of the big wedge. So you look at the weekly charts, it's one big flag, but this is like where you'd see the liquidity grab here, and it's tested that once, came back down to the angular support area. We still have earnings on it coming out on the 4th, just like AMD. These are going to be a lot of market movers here, and this is setting up to finally be a little more leaning towards bullish than bearish for Google, but it can still fail. Still keep this liquidity trap at 204 in mind. It can reject there and get sold real quickly. And still have
Google is interesting to me. They're involved in so many aspects of of the things I'm looking at. People don't talk about Gemini, and I don't use it at the moment, but I mean that's got potential. They're in full self-driving. They're in quantum. They're just in so many of these themes. I mean, I think it's a must own.
Oh, absolutely.
And we're starting to see some traction in GOOX, where people are looking to get the 2x exposure on it. So that's interesting as well. We had some inflows yesterday.
Yeah, this is in a comment here. Bama and Ohio Street, Charlie Munger would be disgusted. Good little quip there. I like that.
Yeah, Charlie Munger would not be using charts or AI to help him pick stocks.
No, he's. I don't even know what the hell he uses.
I mean, the problem is, and why I talk about there's no alpha left without using AI is, what they use to become successful doesn't apply anymore.
Right.
Back in the day, if you wanted to research a company, you're going to the library.
Mm-hmm.
And you're sorting through reams of information trying to find things. I mean, now everyone's got access to the same information. Are you going to find undervalued companies? And the key is, undervalued companies that are just, people have missed. Because most of the time when a company's undervalued, it's undervalued for a reason. Are you going to consistently find things that people have missed? And my argument would be you're probably not.
And, point in case, I don't know, and I'll try not to break my arm on this one, but recently, like literally the other day, I put out an instructional video on CAVA here, just to give you a parallel of what it means to not have access to that alpha because everybody has access to the information. All I did was look at the chart and I didn't dig into the fundamentals. In fact, I got a feedback comment on one end of this where someone was telling me that's a terrible place to eat. I didn't like the service, just a bunch of negatives about it. I'm like, I don't care. I've been to one. I went to one in DC and it was great, but that's their operating area. That's where they were born, so it worked out. But I just looked at the chart. I picked a couple of different points. So I looked at the previous trend, excluding this wick, and just built the block. There's your primary accumulation, liquidity zone, break, secondary move. Overnight, it hit both my targets, the half and whole target on the measured move. And it was just unbelievable. I build a video and release it just before that breakout, put out a swing trade alert on it, and 24 hours, less than 24 hours later, it's hitting both those targets. I'm just like, well, that was easy. And that's the only alpha I got is my information comes from the chart. So when I'm looking at things like market structure and I'm looking at things that are either undervalued or in a pullback stage or whatever it may be, the technicals kind of parallel the fact that everybody has access to the same information. So the chart tells me what the feelings are or the reactions are based on that information being absorbed by the masses, whether it's a fundamental professional trader or the average retail guy or the buy and hold type. Doesn't matter who's in the market. Everybody's using the same information to take advantage of the same plays. Went further this morning and explained, well, if you take this entire trend and put the half back in it, there's your secondary target on this, and it's another half move up to 141. Obvious stuff. And then look left. Bullish trend forever. Still hasn't done market structure. This is just reciprocate moves from the previous trend. That's all I needed. So I define that as a little bit of a ripoff from the Army Handbook for Snipers of DOPE, which is data on previous encounters, and I just call it or previous engagements. I call it data on previous encounters. You just look left on the price, and you can figure out where these things are expected to go based on the sentiment of what people are reacting to that same process of having access to the same information. So for me,
I push back on one thing, and I agree with you. I mean, there is alpha in knowing how to read charts. You just need to be careful because you can read, if I really want to buy a stock or I really want to sell a stock, I can find a reason in the chart. I mean, it's like clouds. We both look at the same cloud. I see Barney the dinosaur, and you see, something entirely different.
right.
So you got to be careful of that. That's why, I like, using AI and then looking at the chart versus, just looking at the chart.
If I could teach AI to just look at the chart, I could have the best.
I don't think it's there yet. I think you can, I mean, it can give you suggestions, which is pretty cool. So like if you've got a strategy that you use, you could put the strategy into ChatGPT. You can have it rate your strategy. You can argue with it about your rating because sometimes it'll get it wrong.
Right.
Then you can ask it how you can improve the strategy. So I was working on something this morning where, I'm trying to come up with a long volatility strategy, and it suggested a way to do it where I would minimize or eliminate the bleed. Yeah, and Howard says it's very close, and I think that's right. I think it is very close.
Yeah, I can agree with that. It's all about and I've been kind of bouncing this off of people and myself at the same time. I kind of liken this to like when Google came to be. Um, my generation was in the sweet spot to being able to instinctively know how to prompt Google for the right information to get the information back from it. So it was just a way of knowing how to ask the right questions, and a lot of that is, you can call it critical thinking and a few other attachments to that process as well, which arguably, current generations have kind of lost a lot of that ability to think critically. So it's, for me, I see it as the same situation. Being in the sweet spot, the generation before and the generation after struggled with it, but they eventually caught on and they learned a lot from the people who grew up in the sweet spot. Now we've got a crop of high schoolers with the advent of AI starting to really take root in things, and I think they're in that sweet spot where guys like me are going to struggle to get on board, and I am. I'm dabbling in AI, but I'm slowly learning how to prompt it better, so I'm in the right process. But that's going to evolve itself as well. So everything you teach AI how to do is going to bounce back, and eventually you're going to have to fine tune your prompts with that learning. And that's where the current crop of high schoolers is going to have an advantage because they're going to be able to think on both ends of that.
I mean, maybe not. So what you're seeing now in schools is, instead of embracing this, they're restricting it, which, makes sense. But, really at the end of the day, the successful students are going to be the ones who learn how to prompt. But if
Right.
they teach you how to prompt, then you're going to know, how to, and I mean, at some point, this has got to completely change, education as we know it.
Right. And it's going to have repercussions in every sector they're in. So I mean, you look at all of the all of the high skilled administrative jobs, like going into information services, information science positions, whatever you may call it, are going to have kind of an ebb and flow of whether or not that's going to be work that's necessary anymore. For one, two, you're going to have to adapt to it. So if you're trying to run a business based on a team of administrative staff who become irrelevant over time because you're going to just lean on AI for it, eventually that comes back to you're going to need a team who knows how to prompt AI to get the same results. You know what I mean? So it's going to have reciprocations, and it's going to have.
So Howard just said something interesting, that we've got a direct data from NASDAQ, Fred, and Edgar at Quasar Markets to go into like ChatGPT. I mean, I would definitely, Howard, I would love to hear more about that, because if I had real-time data in ChatGPT, there's a whole lot more it could do for me, which would be really interesting. So, definitely let me know how that works at some point.
And that's kind of an iceberg statement there from Howard, because I don't know if you've seen the Quasar platform, but it's pretty neat, and it's really building into exactly that. So yeah, I think you'll be impressed with that one.
Yeah. I mean, if you can get me real-time data in GPT, I can have it write shareholder reports, fact sheets. I mean, man, I'm salivating.
The power. You see it. It takes somebody in that space to be able to recognize that power on a platform like that, and I'm really starting to take notice as well. I've been involved in the process of building that whole platform a little bit, but even the stuff I've helped with is just a scratch and a very deep well beyond the surface of that. So it's huge. And I really am blown away by what is possible. So yeah, definitely check that platform out if you got some time, whether you're watching or whether you're Matthew. Look into it.
Cool. Yep.
Going
What else
into
are you looking at?
I'm looking at the CRM a little bit here, and it's kind of in a null. It's in the middle of a move. It could go either way of this, and I was just kind of randomly popping through charts when I noticed this. Um, it's got potential here for a quick reversion trade down to like 330, and then from there, maybe we start to uh, stay within the range of this trend. That's one
Just
where
one thing on this, and just an example of what I'm talking about, why you got to be careful when the big guys have to make moves, is what you saw on Monday is people having to flip their book. So
yep,
out of infrastructure into like AI agent type stuff. This thing went from what, 330 to 370 in 2 days.
yep,
You can't, yeah, I mean, unless you can time it right. Like, if you're in it, in the morning on Monday, all right, fine. But now this whole thing is coming back. Now, I mean, I like this stock, and I'll probably buy more now, on the dip here, but you got to be careful chasing. A lot of people like to chase breakouts, and I think, was that so the high 367.09? No, it didn't quite blow past the December 4 high, but like you could have looked. I mean, I don't know what Mark Minervini's uh, pivot is or whatever, but I mean that could have been a buy signal for somebody, and you would have bought it at in the high 360s, and now you're down 20 points.
right. Yeah, chasing is definitely not a strategy. But we notice it, and in noticing it, we know where all the bag holders are, which is why we can take advantage of a little bit of technical analysis in that respect. We know where the liquidity is. We know where people are holding bags. We know where people chased it to and from. So when we get the breadth of a move like that, and I suspect, and I just kind of drew this haphazardly. First, I sized the move, and then I found the middle, and then I utilized where I think angular resistance and support would be. I think we're in a process of building a flag. This is just the first impulse of it. And eventually I'll be able to measure the second impulse and put the trap detector in it, very similar to what I did with Google. The point is, this thing is also very broadly ranged in this upper end of the spectrum, so to speak, on price action. And it's one where you don't want to get caught off sides on this one. But if you notice, it basically inversed what the SPY and QQQ did by comparison. Let me put QQQ in here. Q had the sell off and a reversion trade, whereas CRM had the buying, chasing, and then a reversion trade. So, it did pretty much the opposite of what everything else did in the market. Pretty nutty. You go and look at this red day, and CRM was the only thing that was green. It was pretty nuts. So by comparison, I mean we can take trades on either side. We can trade the index, or we can go and trade CRM. And in this case, we're looking for the rest of the second impulse in this wedge. I would say we hit about 530 maybe on the top end if Q stays bullish through AMD and Microsoft earnings coming up here. But just be cautious because there's a lot of risk on either side of this. When we're in the middle, there's not to be any kind of innuendo intended from this, but we don't diddle in the middle. We wait for the break. And once that break happens, we can trade the trend. So be prepared to sit on your hands through some of this chop unless you're going to scalp it on a day trader's spectrum. I don't mess with too much of it. For swing trades, though, there's still some stuff to be had there. I wanted to go back and again compare this to what was it, CrowdStrike. We got after this on Tuesday, and we were able to nail and even blow away our bullish expectations here. I had a conservative target here at the 392 area with possible extension into 396 and 400 respectively, and it blew all the way up to 411. Same day the rest of the market kind of went the opposite way. Similar moves require similar actions or inverse actions. So anytime you see the tide changing in the general index, you'll find that there'll be some inverse moves to be had. And whether it's an inverse ETF or an inversely moving sector, there is still some alpha there. Just technical analysis is the alpha, as you said earlier. Just to root back to it.
Take a look next at one we've been on for a while, Lightbridge.
Yeah, that thing's fun.
So interestingly, so I mean, I get information from a bunch of different sources, and I'm in a chat group. I mean, it's mostly UK people, but it's like a lot of the top hedge fund guys in the UK. And they bring me some real interesting names. So that ASPI trade, that was them, for example. And they just sent something out about Lightbridge. They're thinking undervalued by a factor of 5 minimum, easy acquisition for a U.S. nuclear company. So for what it's worth,
it's
a name that I've been in. I'm still in. It's up 20% today. I don't know that I'd be chasing it here. Interestingly, though, they think Oklo is fully valued,
right.
but Lightbridge is undervalued. Again, I own both.
I can agree on Lightbridge, but Oklo, I think still has room for growth. Just to, not even look at the chart. It's one of those names
It's
where
definitely a lot cleaner chart than Lightbridge.
yeah, the Lightbridge is definitely one for the not so squeamish, and we've killed this thing over and over again. I just quickly drew a wedge on it that I noticed, and very very similarly, if this then that would give us a nice clean measured move to target about 950 on this one. And I also love trading smaller than $20 per share stocks like this because I can generate massive percentage in my trading. Like you were saying, it's up, what, 11% today?
Which one? Oklo or
Lightbridge.
No, Lightbridge is up 20.
20, that's right. Okay. So, I mean, when you take this into a factor of, okay, a $10 bill, a 20% move is $2 of a $10 bill, right? So if I can take that kind of leverage without having to put out so much cash, I make some killer trades. Versus something that's a little more up there in the same sector, I can find some reason to trade this because I'm kind of nimble when it comes to day trading. I can spot this stuff pretty quick. Enough seat time will give you that. Would I buy it here? I'm gonna wait. If I didn't get in this move this morning, I'm gonna wait patiently for consolidation, either to follow through with today, tomorrow, the next day. Prospectively, we have potential for a bullish measured move if this breaks north of the regression line here. And if it rejects here, half back is pretty probable too. So we're either going to hit 750 or we're going to hit 950. Wait for this to give you a sign.
And again, in my thought on these, again, has not changed. Monday, I was not selling. I mean, that's the cool thing about not being an institutional investor. They were forced to sell. And I talked to some who were like, we have to flip our book. I mean, we have no choice. But I would not have been buying either. We still don't know. The sense is that $6 million number on DeepSeek is not right. We don't know what the real number is. We think it was made with, the lower quality NVIDIA chips, but we're not sure. There's too much uncertainty in my mind to make a big bet on power and infrastructure, but there's too much potential to not be in it.
Right.
And just, I would be careful. I always, when an analyst comes out and gives a hold recommendation, I always think that's kind of like bullshit. But I mean, that's what I'm basically saying on infrastructure and power. I wouldn't sell, I wouldn't buy it whole.
Right. And I mean, I went to the monthly chart to go like, this is just getting started in market structure here. This is where we would expect a trend after being flat for forever after that huge, hype wave chased it up. Don't ignore the reverse splits, though, guys. There have been a couple in this one, I think, if I recall. There's at least one. There's one. One for 12. And it may have done it before, but the idea is right now it's very volatile. Would I want to own this for long term? Hell yes. It is a great equity to own long term because it's got huge potential. And I agree, it is very undervalued in the current time space. But again, I like to use the short-term volatility to compound my long-term investment. So I'm going to do that. That's my MO. Would I compare that to? Let me compare that to OKLO chart-wise.
Yeah, I mean, OKLO is a cleaner chart. You've got, your breakout, your undercut and rally at your 50-day, undercut and rally at the 10-day. I mean, depending on what type of chartist you are, there's all sorts of very well-defined entry points.
I can agree on that.
With predefined stops.
I can say maybe at value in the short term, but I think long term this thing has a long way to go. Just saying, it hasn't quite hit the peak of the primary side of market structure in this move.
And the crazy thing about it is you and I were talking about this at the bottom.
Yep. And picking up on that, I mean, that was something special for us. We really, really killed that sector as far as trades go. I mean, it blew my expectations away on like the next week when we started talking about this thing. And then it finally gave some back and gave us opportunities to trade it again and again and again. But I mean, fundamentally, this thing is it's limitless. I mean, the only thing you really have to take into consideration long-term wise is as a race of humans, we still haven't figured out what to do with the long-term waste products that nuclear produces. Bury them for forever, but let's say society collapses and we're down to like Planet of the Apes scenario where eventually society has to rebuild itself from scratch. All the stuff we buried, it's going to be rediscovered at some point, right?
Yep.
What do we do with that? Well, I'm kind of thinking I wish there was a company that has a reasonable way to recycle this stuff, and there kind of is some possibility in that realm. The issue is when nuclear fuel rods are spent, they're no longer useful in a fission reactor. They can still be useful if you can condense the energy within the spent rods and still also make use of what was normally nuclear waste. I wonder if there's something in there to be seen, if there's a company out there worth looking at in recycling nuclear waste into still usable power. That's what I'm going to look at next, and I'm starting to take a little dive into that. I might be talking to AI a little later about that and see what.
Let me know if you find out anything good.
Will do. It's just something that's kind of been on my mind. I mean, I know it doesn't generate a hellacious amount of waste, but the waste it does produce is very, very dangerous if it's in the wrong place at the wrong time. So where to put it is one thing, and that has been the issue is people just keep storing it and storing it and storing it. Eventually those storage systems can fail, and long term, I mean, there's enough of it to where, I mean, it can end humanity. We got to start thinking proactively here. How do we recycle this stuff and make it usable again while reducing the risk of, ending the world, so to speak? That's where I would like to focus myself. So, but in the long run, mid-long run, I guess I could say, within the next 10, 15 years, yeah, that infrastructure in nuclear power is going to have to be huge until they can efficiently come up with the fusion reactor and make it plausible to produce the amount of electricity that's going to be demanded from it, plus the amount of time it's going to take to develop and build that infrastructure. I think that traditional nuclear companies are going to have at least the next 10 years to take advantage of that time it's going to take to finalize the development of the fusion reactors. When that happens, though, cool thing is the waste is not dangerous. There really isn't any. Just hydrogen and helium, essentially. So that's another space to look into in the long term. If you find a publicly traded company doing fusion stuff, hey, maybe. For now, it's fission, baby. Keep cracking. No pun intended. Splitting atoms. Come on, I'm a geek.
Yep, that's all right.
Any others in the chip makers that I've kind of been thinking about? No one's looked at IBM in a while.
IBM is one that
You see what
that
I mean?
I've been on for a while here. Wow, nice.
My anticipation when we looked at it last was this was going to be a big ass cup and handle, and where you'd expect to handle, and the little bit of half back short period here, and then the explosive move. I already had that target laid out at 250, 350 up here, and it never gave us the handle. It just gave us the hell no. We're just going to run it, baby, and it blew away my expectations and gave us a half move to boot. So this one is looking at some potential short-term pullbacks here. So it might give us an opportunity to not chase that candle because that's a big candle. Maybe.
Yeah, I mean, it depends on your trading style. I mean, this is a typical viable gap up. You'd use the low of the day as a stop. I'm already in it. I'm not going to buy more of it. But this is a sneaky AI and quantum play.
Mm-hmm.
And it's not your grandmother's IBM.
And when we were talking about it last, it's exactly the statement we used is there is something going on in the background with AI and IBM that no one's noticing, and someone noticed all of a sudden after the fact. We said it first. Come on now. But I wasn't expecting that big of a move in that short a time. That was pretty massive. And it's still kicking ass. I'd say maybe if we get a nice short-term wedge here, we have a accumulation chance, and then we can start building another measured move off of this block here. So probable. Sorry for my sinuses. I'm sniffing every other sentence here. Allergies. And then another one that we didn't really think about until recently, MU. Good old Micron. We kind of had the same situation that we were thinking with IBM. MU is eventually going to be a good benefactor of this AI boon, and it did in the short term, and it hit that liquidity and sold off really quickly. It was pretty easy just looking for reversion trade, liquidity zone target, but it's pulling secondary market structure moves here in this, so I would expect this to be a giant rounding bottom and then eventually give us a trend back to that 120 target. So is MU capable of pulling a move similar to IBM even bigger? That's my question.
I mean, look at this chart. I mean, I own it, but I only own it because I bought the calls a long time ago and they went way down in value, and I figured I wouldn't sell them. And I mean, now they've come back quite a bit, but I wouldn't be putting new money into this chart.
Not yet. And short-term liquidity says, yeah, definitely not yet. There is potential for a reversal here in the technical side. There is resistance right in this LZ here between about 92.5 to like 94-ish, ballpark it. If we melt through that, sure, we get a short-term reversion up here like 97.50. Maybe even get I would say an outsized move could take us up to, I don't like doing that, but I'm going to make it thin. Kind of in the middle here between the two LZs in the short term. It's possible if it melts this, but for now, it's a sit on your hands and wait. But if something cracks off on this guy, it could potentially run much higher. Just looking at the long-term chart, this is market structure. Resistance is right up here. If things get bullish here and it starts to break resistance levels, it can slowly trend up to that point, and then after the fact, the explosive move would be up to the 120 mark up here, just giving half back. So one to keep an eye on, keep an ear on for news if you want, but it's just one of those. It had the first hype wave here, the whole AI thing. It's kind of consolidating. It's given us the look at maybe we got a good chance of being bullish on this in the long run, but for now, wait patiently for this zone. Any others to mention?
So we got 4 minutes. I'll throw in, I mentioned it at the beginning, AI in healthcare. I mean, Tempest AI, Monday's sell-off was a gift. Whether or not DeepSeek is going to change everything shouldn't matter. And if it does, it's probably a net positive to a Tempest. So, again, Nancy Pelosi is smarter than all of us combined when it comes to investing. If she's buying, that's a stock I want to own. And, and all the names are going up. Schrodinger, RXRX. Yeah.
We had based
Tempest is the leader.
We had based it out. I think it was $60 reversion target in spite of this range down here. And it's got potential to hit that in the short term, but long term, if it goes parabolic on us and runs up to like 66 here, I think there might be a few bag holders waiting to offload some right up there, just in the chart. I'm going to compare it to what I was saying with QQQ, and I didn't want to sound like a Chicken Little kind of guy, but when QQQ had the same pattern, this descending channel, and typically you get fast liquidity grab reversion trades, and then they rip to the downside, and none of us saw the DeepSeek thing coming, but the chart told us something was ominous. And this kind of speaks to me in the same way. If things just run parabolic up to here, watch out, because it can really rip a face off to the downside quickly. And you might get a good trade out of the bounce off of that. Catch the bounce for sure. It'd be a good dip buying opportunity. But something tells me there's something in the works here to kind of be a little bit of a headway in the short term. And at the same time, we got some meddling in the space. We've got RFK guy that kind of got ripped today a couple times by some media outlets.
Yesterday, the thinking is he's going to get approved, but it's not. It's not 100%. Again, I don't. AI. I don't think he's got any influence on. Unless you're talking about Moderna, Pfizer,
right?
He could have some influence there. Again, Lilly in NBO, which I did go back into. At least ChatGPT thinks he's not going to be able to fight. Ozempic being approved for Medicaid and Medicare. So,
right.
And funny, Babylon B put out a post. RFK testimony interrupted by brought to you by Pfizer ad.
Yep, I saw that one. I got a good laugh out of that too.
Yeah.
And the technicals on MBO are just starting to maybe give us a sign that there's going to be some good volatility here. This is what I used to always call the old pop and drop bear flag. So you get a failed reversal, you get a support test, you get this sudden rush of buyers, and then they get liquidated right in the zone. And now we're back to point A on a liquidity zone for resistance after giving half back. So short term, if things end up in the right way, this can be a failed bear flag at this point. If we melt through this zone, we got a good shot at going for reversion. But if we reject it, we can sit on our hands and wait. But so far, it's got the makings of a potentially failed bear flag. And if you just do the old high-low mean thing here, we've got the high, the low, the mean. We're right at the mean. So it's a matter of if it continues to run this liquidity zone, we got a good shot at running up. So it's leaning more bullish than bearish at this point, but
Yep, I would agree.
I'm gonna wait and see what happens with this zone break here. As far as the moving average things go, I mean, it's got that 8 and 20 cross happening today. So if it's got potential, this is it. So if we at least get the short-term trade from A to B in a liquidity zone, cool. It comes up to the fib level of this previous high anyway, and then we can use that as a let's set our limit orders up here and be ready to eject if it rejects here. So it can give us a good short-term trade and a potential long-term trade at the same time. So it might be a good chance to get long on this one.
Yep. All right. It's 12:30. So let's
It is time.
let's end it here. We will be back next week.
It'll be here on
which
Tuesday.
I'm sure will be. So we'll do the YouTube Tuesday, and we'll do the GoToWebinar on Thursday.
Sure thing. And we have been catching some traction on the QMX feed there, and thankful for that. Getting rebroadcasted over there, getting quite a bit of views. We appreciate your support. Thank you so much for checking us out. And if you want to be able to catch reruns on this, you can catch it on the X channel there, or you can go straight to our YouTube and catch it there as well.
Yeah, and I'm putting these on my YouTube as well, and and I'll also put links in the newsletter.
Yes. And I've got links in the description on our YouTube channel to go into signing up for the Heat Strategy mailer, as well as I threw a couple educational links in there as well, and how to get into our community. So we all point to each other and we all thrive together. This is what we do. Is we're bridging the gap between retail and professional institutional traders here in a way that's beneficial to both. That's my whole plan. I love helping people. And it doesn't matter if you're a billionaire or a guy with a $50 trading account. I love helping y'all. And I love being able to help people catch their own fish, make their own trades, be educated and smart when it comes to being in this market space. So thanks again for joining us. We'll see you guys on Tuesday, and we'll be sure to have some earnings coming out and some possible predictions for range trades going into earnings. The outcome's going to be even better. So we'll have some killer swing setups to look at next week, I'm sure. Thanks again.